Hi everyone, hope you're all doing well, and today we're going to be talking about Huya and why I believe Huya is going to go to $40 a share within the next 2 years. So I kind of sometimes make these predictions like from if I was an analyst, this is the price target I'd put on it. And I've kind of made some of these predictions before. I made them about Facebook, Microsoft, Pinterest and also Disney, and pretty much Pinterest, Facebook, Microsoft have all got to them price targets within them 2 years, even quicker than 2 years. Quite often, I think all three of them was within a year. And also Disney is kind of getting there. We'll see. I don't think it'll be too long until it gets to the price target that I put on it of $200. But those are some predictions that I have made previously, and this is kind of the fifth video in that series. I know some of you guys asked if I can do some of these a little bit more and talk about where I think share prices will be in 2 to 5 years time. So if you want to see that a little bit more, I will try do some of them videos. Let me know what sort of stocks you want to see. But I like to talk about some of my favorite companies, and like I say, I talk about exactly where I see them going, and Huya is definitely one more of the shorter term holds that I have in my portfolio. When we talk about stocks like Diamond Peak, we're talking about 5 years. Huya is kind of a 2 to 3 year hold for me. And if it does get to that sort of price range, I'll be very happy within the 2 years time. Now I was going to make I have actually already made this video once, but then the merger was announced and a lot of the information that I put in the video would have just been like, what? Because I'm talking about there's potential of a merger, what this will mean is this, and now we've got the actual merger. I was like, it's just so out of date that I've kind of got to scrap the video, which was a pain because I edited it, everything like that, and now I've got to just totally restart it again. So this is my actual second attempt at this video, but yeah, we'll talk about Huya and why I think it's going to go to $40. As always guys though, if you smash the like button, and if you are new around here, if you could subscribe, that's absolutely amazing. And yeah, we'll get started on why I think this stock's going to $40. So the first thing I'm going to do is I'm going to start with the merger, because that's the fresh one out there. And just a point of view from the share price, there was a dip in the share price, and I've been wanting a dip for so long in this company, and I got it. So I'll reveal on Friday or Saturday if I did buy the company, but I'm sure you guys can guess. If it's a company that I really love and it dropped 10%, I think you kind of know what I might have done. If I did buy any shares or sell any shares, I think you can guess, but I'll leave it to Friday. Anyway, yeah, the stock dropped 10% for Huya on the news, which is a good entry point now because there's a lot more upside in the share price from here. We're talking getting towards nearly 100% upside potentially. And the reason why the stock went down from the merger point of view is it was seen a little bit negative for Huya, kind of overpaying for Douyu, which was the company they were buying, the other Chinese streaming platform, which I agree with. The deal that the merger that was put in place was a little bit unfair to Huya, so that's why in the short term traders moved from Huya over to Douyu to get into that side of it because they got the better end of the deal. But in the long term, merging these two together, the two competitors, is beneficial for both companies. And obviously, you're going to share the platform there. The content makers, there's not going to be such a bidding war for them now because they'll be both working together on the same platform basically, which is a massive benefit from both companies, especially from Huya's point of view. So yeah, that's a great thing. And also the big thing behind it is Tencent. If you don't know Tencent, it's like the big company in China. It's the big one. So yeah, Tencent are the big boys that are behind this merger. They're the ones that are kind of wanting to force it together because they have such a stake in Huya. So I think that's another bonus for Huya as a company, that Tencent have such a big stake in them. Obviously, if Tencent or Alibaba have a stake in you, it's normally a decent sign of a Chinese company, and they have a big stake in Huya. So obviously, with them having ownership in both companies, putting that merger through will benefit Tencent more than anything, because they can kind of have everything in one platform there. So they have kind of control over the streaming service. And obviously with Tencent forcing this merger through, I think it kind of leads to the point of where Tencent are at. I feel like Tencent potentially, now that they have everything under one name, might increase their stake, potentially a complete buyout maybe. We'll see what happens, but I think Tencent are a little bit busier behind the scenes than what people think. And now that everything's under one name, I could see Tencent maybe looking at, because trying to buy all separate companies is a nightmare, get it under one name. I see Tencent being a little bit busier in a year's or two time with Huya, and maybe just increasing that stake, or maybe a total buyout. We'll see. But I think Tencent are up to something. Anyway, that's everything about the merger. Now we'll get stuck onto the company itself. So Huya, obviously when we talk about the valuation to start with, trading at a very low forward P of around about 20. Now for a growth company, which this company is, which we'll talk about in a second, a growth company with 30% revenue growth at a forward P of 20 is insanely cheap. Insane. You know, you'd hardly see that out there. So when we talk about it from a valuations point of view on Huya, first of all, it's already cheap. So that's a great starting point for Huya. Now, what is Huya as a company and why are we going to make money on this? What is the catalyst for the share price to go up and we make money on it? That's why I always like to look into a company. How am I going to make money? Well, first of all, it's undervalued. So it kind of suggests that the share price could go up a little bit from here. Now, as well as that, the company itself, we think about what industry it's in. It's on streaming, especially gaming and streaming. Now that's a massive growth sector. Massive. Esports is growing huge. So we're in a naturally growing sector right now with this company. And Huya is the #1 player, which is great because they're taking more and more users onto the platform. So we're already in a growing sector, natural esports growth. The second thing as well is when we talk about Huya, why are there going to be more and more users? Well, at the moment, there's a new console cycle coming out. And if there's new consoles, that always leads to new game titles. New games, new consoles, more and more people streaming the new games, a lot more hype there. So with the new natural cycle of consoles, it's going to lead to another upcycle of viewers and also, you know, people on that platform actually streaming. So from that point of view, they're going to have more people on the platform because of the console cycle update and the new game cycle update that we currently have. So growth sector, new console cycle, benefiting Huya massively. Also, as well, we've got Huya that have got a new deal out there with League of Legends. Massive game. And Huya in general just pick up some nice little deals every so often. You might see them. And also, with it merging with its rival now, obviously it's going to benefit them in this next cycle of games, consoles and everything like that. So the merger coming together with the game cycle and the deals that they have in place and the current valuation signals that Huya is very cheap right now. And also when we look at the company from a growth point of view, when we look at the forecast and what it's done previously, profitable, it's going to carry on making profit, revenue going to grow as well. And that's going to be somewhere around 20 to 30% year over year, which is a massive growth company at a very cheap valuation. So you look at what's going on with the company right now and the valuation and that growth, it's going to be very good for Huya over the next coming 2 to 3 years. And that's the catalyst that I see it going to $40. And also when we take a look at the balance sheet as well, very good balance sheet right now, very healthy balance sheet, no debt on there as well. So healthy company, great growth, great valuation. Combine that all together, I can see this company going to $40, potentially even before then, we'll see. I think that Tencent in a year's time might just start knocking on the door about, seeing what they can do here, because I think it's an area that Tencent like and that they will be willing to get a little bit more into that company and hold even a bigger stake than what they currently do, which will be quite easy for them because of the stake that they currently have as well. So I see this naturally going up in share value. And if it doesn't naturally go in share value, I see Tencent in behind the scenes now also maybe looking at increasing their stake as well, which will be good for us as shareholders. So it could go either way where Huya goes from here now, but either way is positive for us as shareholders in the long term. So I hope that video helped you guys on Huya and hopefully it gave you a little bit of information. As always guys, smash the like button if you are new around here. If you could subscribe, that'd be amazing. And I'll see you in the next one.